So I'm optimistic that in the end we will, over a decade or 2 decades perspective, we will have an apolitical money in favor over political money.
Today we are going to discuss the US dollar, stablecoins, the digital yuan, and the pivotal role coin possibly plays in the current developments. And this is really interesting to understand, as we are witnessing significant developments that signal a profound shift in power structures. And these developments are not just about the financial system transitioning into the digital age, but they also hint in shifts in geopolitical power dynamics, as well as intra-state shifts in the financial landscape. So to understand what's going on, let's explore current trends, the technologies already at play, and how the key players are positioning themselves in this dynamic landscape. And we're gonna start with laying the base with a really important definition, which is stablecoin. Christoph, could you help us to understand what is a stablecoin?
Yeah, more than happy to do so. Stablecoins are cryptocurrencies pegged to fiat currencies. Fiat in the mainstream is considered as stable, hence the terminus stablecoin, which is nothing else than a centrally issued cryptocurrency. With centrally issued, I mean there's one single provider, usually a single company, which issuing this cryptocurrency. And the idea is to minimize price volatility. In comparison to other cryptocurrencies, you have a strong or high volatility measured in price movements, not to be confused with risk, right? I know finance guys always consider volatility as risk, but this is certainly not sufficient to measure risk only in volatility.
Yeah, and currently 97% of stablecoins are pegged to the US dollar. And they have been really high up the US agenda lately with the Genius Act and the Stable Act. Could you help us with understanding why stablecoins are strategically so important and why the US is driving that so hard?
So first of all, with the aforementioned stablecoins USDT, which is Tether, and USDC issued by Circle, we have the vast majority of, by far more than 90%, issued by these two. And they are US dollar pegged. There's others like next to the US dollar, there's obviously Euro stablecoins, etc. as well. But these two dominate the market. And they're reinforcing also the global dollar dominance, right? And we come to the other initiatives in the world in a second, right? And these two acts, they obviously create a regulatory framework. So the Genius Act aims to establish a clear regulation for stablecoins, ensuring market stability, whatever that means, and actually fostering innovation. Yeah, at least that's their marketing claim. What's behind that, we will see. The clear strategic agenda is to create an economic impact, and President Trump's plan is to lower interest rates for the US in the long run. How does that work out? Very simple. The idea is obviously that stablecoin providers and issuers are by now one of the largest, combined there in the top 10 largest buyers of T-bills or bonds of US treasuries in total. And this obviously decreases the price and hence decreases the yield of the treasuries by increased demand. Okay, so they buy the bonds and the yield goes down, which is obviously in favor of the Trump administration, because reduced yield means reduced fiscal budget in terms of interest rates. What that means in precision, according to US Treasury Secretary, basically 1 basis point reduced yield correlates exactly to $1 billion US dollar, which can be saved in terms of interest rates. So when the yield recently dropped from almost 5% for 10-year treasuries to by now it's a bit above 4%, that's 100 basis coins, and that means per year an interest rate savings of almost 100 billion US dollars, which is significant. So that's the overall big picture of what we're seeing here with the new regulatory frameworks and these innovation fostering stablecoin initiatives.
Cool, thanks. Let's explore a specific stablecoin that is related to Bitcoin. Tether has issued USDT on the Bitcoin blockchain. They want to combine the decentralization of the Bitcoin blockchain and the security of the Bitcoin blockchain with the price volatility of the US dollar in fiat terms, as well as use the efficient lightning rails already in place. Could you talk a little bit about this? Why does that make sense? What are the regulatory differences?
Yeah, that's a more complex question, combining both worlds, right? When it comes to an central provider like USDT or Tether, which is obviously part of the Finex universe, because the company behind issuing Tether is a part of the Bitfinex, one of the largest exchanges in the US. And they are issuing the US dollar. And issuing an USDT on Bitcoin basis is certainly a new quality, because on the one hand side, it is now possible doing that by Taproot, etc. Taproot is in new Bitcoin sub-protocol, which is also Lightning compatible. It's included in the Bitcoin protocol, and that allows you to create, let's say, attachments to things. You basically attach a Satoshi to one specific thing, that could be the US dollar, it could be other real-world assets, it could be other financial assets, but that's the idea. Okay, so you combine that on a Taproot basis, and this allowed, and this also the technical fundament for creating what we've seen in recent meme coins issued on the Bitcoin basis, which you could like or not, but it's a recent hype that we've seen. And having that done by Tether, issuing basically an USDT based on Bitcoin, well, it makes sense, because at least from a payment provider perspective, right? Because you certainly want to combine less price volatility of a US dollar based stablecoin, so you can actually utilize and leverage Lightning Network. Maybe you have to explain, if you're not familiar with Lightning, it sits as a layer 2 on top of the Bitcoin main layer, and it enhances the transaction speed. It massively reduces costs to a friction of a cent for each transaction. So basically, you have micro transactions which are possible on a Lightning Network. And yeah, this is a unique settlement layer, and not a random technical network. When you combine that with the stablecoin, it makes sense for players like Tether, but also for merchants. Because if you have an online shop, if you're like a standard merchant, you typically are not yet, at least, interested in receiving a Bitcoin transaction. So having a US dollar on a Bitcoin basis makes sense.
Yes, that's really interesting. But what do you actually see as a risk in using a US dollar pegged stablecoin instead of sticking with Bitcoin the whole way through?
There's obviously a centralization risk. So it undermines the trustless idea behind Bitcoin when you actually trust a provider like the stablecoin issuer. Okay, so you basically return to having an error-prone or failure-prone setup here, because you obviously have to trust Circle, you have to trust Tether, and all alike, right? So you introduce an unnecessary counterparty risk, which I personally see as a more severe risk than a market price risk. Obviously, there's a huge Oracle problem. It comes down to the transparency issues, and Bitcoiners call that the so-called Oracle problem, because you have to trust one centralized party, one party like Circle, Tether again, and you have to trust them that actually their underlying, may it be the Bitcoin or may it be the treasuries that are bought and obviously are an underlying of the stablecoin. With underlying, I mean an asset backing the cryptocurrency, because the cryptocurrency itself is like a digital entry, and you have an underlying, in this case, that should bring in the value. Yeah, so it is the underlying of the stablecoin is not derived by algorithmically scarcity, as in Bitcoin, but in the stablecoin you have an underlying asset. In this case, usually the US dollar. Third answer to your risk question, there's regulatory risk, because what is good now for the US, because Trump really wants needs buyers for treasuries, he is obviously very much in favor of parties like Circle and Tether, who are massive. I said that in the very beginning. I really have to underline that one of the stablecoin buyers are in the top 10 of treasury buyers by now, and this is massive. So there's also the regulatory risk that when obviously another administration in a couple of years would turn back the wheel, and then you have an issue with stablecoin regulation against you, not in your favor. So in my opinion, it makes much more sense to have a stable regulation on a cryptocurrency, in particular like Bitcoin, which is 100% decentralized and that already have a settled regulatory framework. It is very unlikely that the US will consider Bitcoin something else than a commodity. And so you have regulatory safety, if that's a thing, right? But regulatory stability, whatever you want to call it. But for Bitcoin, it's settled. For stablecoin, it is volatile. And you can see that also in the EU. MiCA regulation is heavily regulated in stablecoins. This is also why all major exchanges already delisted Tether's USDT already, at least in Europe. And yeah, this is also part of regulatory uncertainty when it comes to stablecoins.
So yeah, that's really interesting to understand. So what we are actually seeing is a more centralized approach, to sum this up, and a technical solution that is not as censorship resistant as Bitcoin is, as I understand it. And the other thing which is really interesting is that we actually see a move towards a digital dollar that is issued by a private company, not a bank deposit, not by the central bank. So what this would also mean is a move away from central banks and from fractional reserve banking, which will be really interesting to watch what's happening there, right? And you mentioned before that there are also other initiatives. What else is happening in the world at the moment?
Yeah, China 1 week ago announced that they will perform their major share of foreign trade in their digital yuan or e-yuan or digital renminbi, whatever you want to call it. And they have a platform. It's called China's Cross-Border Interbank Payment System, CIPS. And a week ago, on the 4th of April, they actually announced and indicated that they have now connected to major 10 Asian providers and also major 6 Middle Eastern countries, and now indicate that they will facilitate the trade with e-yuan or e-renminbi. Okay, and this digital yuan move is obviously nothing smaller than a direct affront to the US dollar, which is major leading currency and major settlement currency today. We don't have to estimate this move because these 16 countries, they actually, together with China, they made up 38% of the global trade volume. Okay, so and now imagine that these 38% switch from a formerly dollar-used basis to a digital yuan basis. Okay, they obviously bypass the SWIFT system, which is a Western banking system for global trade settlement. They will bypass that and will obviously settle everything in the new Chinese CIPS system, their interbank payment system, which is massive in my opinion, because obviously they now completely depend on China for these countries, arguably, and obviously it seems to be better than being completely dependent on the US, because SWIFT is completely US induced. If the US induces a sanction or a new embargo, like we've seen in February 2022, then you're basically out of the SWIFT system, not part of the global interbank settlement anymore. And obviously the Chinese, after the recent tariff escalation, they are really concerned that they could be kicked out of SWIFT. And so they proactively go for their CIPS system, the digital yuan, which is a CBDC. And to your very beginning of the question, a CBDC is a central bank digital currency and is unlike a stablecoin, is issued directly from the central bank. Yeah? So there's no underlying, again, you can argue that having a company issuing US dollar stablecoin with some underlying is at least better than a central bank issuing a CBDC without any underlying at all, or very little underlying, depending on what is in the vaults of, in this case, the People's Bank of China. So that's basically what we see right now happening. I'm not too optimistic in terms of this trade war, which really escalates not only on a trade and tariff level, but also now on a financial and currency level. And Ray Dalio, one of the largest hedge fund managers in the US, he founded Bridgewaters, and he basically anticipated that a currency war will lead to a trade war, and the trade war sooner or later will end in a physical war. And we will see how that turns out in the next couple of weeks, months, and years ahead, right? But it's a very tense situation that we're in right now. And interesting to see that all of this, in my opinion, is in favor of Bitcoin, because Bitcoin is apolitical money. Every stablecoin, every CBDC is completely political. You always have one nomination, either may it be the digital yuan, may it be the US dollar, if digital or not, doesn't matter, but you have a political decision to make. And neither party, and I'm apolitical myself, right? So I'm not like, okay, you must go this route or this route, but I'm saying, okay, when you have these political tensions, obviously there's a high demand, an increasing demand for an apolitical money, which is Bitcoin. And like with the digital yuan, you can settle billions in global trade, which makes sense. Yeah, obviously, it is fair to say that the Lightning Network is not that far in terms of capacity to actually settle majority of, by far not, to settle the shares of global trade. This is far too early, to be honest, here in terms of capacity. So we're talking about a Lightning capacity of below 5,000 Bitcoin as we speak, but we've seen tremendous growth in the last couple of years in the Lightning Network. So I'm optimistic that in the end we will, over a decade or 2 decades perspective, we will have an apolitical money in favor over political money. So yeah, I hope this helped to basically sort out things. And we're living in very interesting times, and yeah, it's a pleasure to discuss that with you. So in this regard,